early light was so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight. Oh, the ramparts we watched were so gallantly streaming, and the rockets regular upon spur, singing out, yeah, through the night that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free and the home of the
Good morning, good Friday morning. World HD streams live on Rumble, X, and YouTube every weekday morning, 8 a.m. Eastern Time. Happy Halloween, and today is Commodity Friday. Some good stuff to go through today. This government shutdown, and then what's going on in this agricultural space. I saw a clip on Brooke Rollins the other day. Well, I was hunting for it, didn't just see it. It's hard to find her. She's the head of she's our Secretary of the Agriculture, and she was out there quite a bit at the beginning of the administration. And then we haven't seen much of her in several months, but you have to go hunting for it. But I found a good clip, and it brings together the government shutdown, brings together what's going on with livestock, with cattle, meat prices, and also with the commodity space. So we've been talking about the soybeans, and that was going to be a good indicator of this trade deal with China, and we got it right. I mean, the soybeans were right; they pretty much called it. We could see, we were looking for that. We had a harmonic structure on this. It didn't go to the full downside. Would have loved to have seen it get to the full downside. Low risk spot to take a chance. Then we rolled contracts. We got to downside halfway on this January contract in the soybeans, and halfway level, halfway failure. I at this point, we'll take a look at that chart today. But then we see the market move back up, moving up into the breakout zone, into these China in Asia, this Asian tour, and it culminated with the meeting with President Trump and President Xi in Korea. Just yesterday, was it? I think, anyway, the days go together. I think it was the day, anyway, whatever day it was, because, you're dealing with a huge difference, right? Halfway around the world. So I can't remember exactly which day it was. I think it was yesterday. But anyway, they, this temporary fix, okay? I'm seeing a lot of people are skeptical that I'm skeptical, not a lot. I'm seeing some people that are skeptical that this China trade deal is going to really amount to a whole lot. How long is it going to be until we're throwing, truth posts back and forth back at China again? I don't know. Again, fentanyl is a big one. Agriculture, how are we going to know? When are we going to measure that? Like, what's our timetable on when China would actually make these soybean purchases, and when would we actually see that come through, so we can actually see if there's something happening on this front? And so I guess we just have to trust the administration to enforce this, and Brooke Rollins is going to be the one that does a lot of that. So with that in mind, she's perfect one to go to look at today, to listen to what she has to say. She does a good job of covering this government shutdown, but then we kind of move through the whole process all the way through to agriculture, into livestock prices, and then the farmer and everything else. So I think it's a good. I think I'm kind of. I was glad to find that because it fits really well with today. We're on day 31 of the government shutdown, and it's starting to get real now. We've been talking about this, probably the end of the month on the back end of this Asian tour. That was first and foremost. And this patchwork framework thing that happened with China, in my mind. And then now, I think today, this weekend, and into next week, we're going to see the rubber hit the road on this government shutdown. What are they going to do? How, what's the outcome of this? Is it just going to be one of those things where it's like all this, 31 days of listening to this every single day, and then we just do some kind of a patchwork thing again, and it's like, okay, we'll be back in 90 days to do this thing all over again? Or is there something more cooking here? Is this to put the hammer down on the Democrats? Is that good? I mean, yes, it's good because we have some psychopaths in there, but then we also have some nut jobs on the right too. So, it's this mixed bag of, a lot of DC is just bad, and so that's kind of the way I look at it. And so trying to get to the facts today of are we going to put something together? Is there going to be something positive that comes out of this that we can see it's going to lead to something better than just this constant, um, you know, game playing that goes on in DC? All right. And so we'll take a look at that from the lens of Scott Bessent, who again, questionable character. I I don't know how else to put it. I mean, I can't believe that we have this guy. Well, I mean, here's a situation that would get the worst. If we have Scott Bessent at Treasury, okay, which is going to be the case, and then we install Rick Reeder at the Federal Reserve, and then we have Larry Fink, the head of the World Economic Forum, and then who knows, and then Mark Carney, pestering us from Canada. It's a lot of stuff for President Trump to battle against, is all these knuckleheads, that are definitely working against we the people. I don't know of any of those people that are working for we the people. Well, Scott Bessent, you can make a case for it. Why? Because he has two little kids, and maybe, just maybe, right? He sees he needs to, maybe, just maybe he's working on behalf of the people. But I question, I question that a lot. Okay. So with that, good morning, Rachel. Good morning, Trumpet. Good morning, Frank. Good morning, Crash and Splash. Good morning from Central Illinois, home of the ugly wind farm country. Yep. Rachel Hawk. Okay. Morning from Central Oregon, a blue city surrounded by red counties. Okay, good. I love it. Good stuff going on in there. Yes, China, the soybeans. Our men don't need the estrogen. All right. Great way to thanks for helping make Friday fun. I appreciate that. Okay. All right, so let's jump in. I don't think it works. My ability to switch between these things works, and then it doesn't work, and then it's not working again. So I don't know why. I really don't know why. I'm gonna reset this computer this weekend. My problem is I build up so many windows when I'm researching. I mean, I wouldn't be surprised if I have. I mean, between 3 or 4 machines, I probably have 1,000 windows open. I mean, it wouldn't surprise me if I have that many open. So I just gobble up RAM on these machines, and then I'm probably the problem, more than likely. I mean, for me to just blame it on the unknown is a little unfair because I know I know that I'm the problem. When I was working with Frankie, he would remote in sometimes, and he would say, "Dude, like how many windows? You're like setting the record for how many windows you can have open, how many tabs you can have open." All right. Okay, so let's jump in and take a look at this. Let me see how I'm going to do this now that we've got. Let me see if I can. Here we go. I'm just going to have to throw myself up in here. Or there we go. Okay. Oh, boy. Not good. Let me just clear all this off there. And why is that? Okay. Oh, my gosh. Okay, that's that. That's that. Let's see if this works. Okay, that'll work. All right. Okay, good thing there's a workaround. Okay, so this week we have this week the big thing was the central banks. All right, Bank of Canada started on Wednesday, then we came out Wednesday afternoon. Bank of Canada did cut rates. We cut rates Wednesday afternoon. Japan held steady, and then the European Central Bank was out yesterday. They held steady. Now I want to go through this. I would have loved to have had time to do it, but it was a long press conference with the European Central Bank in Florence, Italy. Normally, I think they're in Brussels when they have this announcement. So they have this space station, it looks like, right? It looks like Star Trek. And they have these podiums, it literally, to me, I don't know how else to describe it. It looks like they're on a modern day Star Trek. And and I'm sure that's the image they want to put across. But normally they're in Brussels, and they were down in Florence, Italy. Now, the last time they were there, Mario Draghi was the head of the European Central Bank, and it was a train wreck. I think they had protests outside and some riots and things like that. So, but this one went off fine, of course. I'm sure they were ready for that if there was anything to really protest over. And I don't remember when that was. I want to say it had to at least be 6 years ago. It had to at least be Trump 1.0 or potentially even before that. And so anyway, it was a long press conference on the back of the rate announcement. The statement gets released, and then the press conference. And so I want to go through that. I went through some of it yesterday, but I had some issues with Bloomberg, and it was kind of getting chopped up. So I'm going to go through that this weekend, and it'll be perfect for Currency Day. I'd like to go through that because they were talking a lot about this digital currency, okay, and that how they need to do it. And they're trying to really sell this thing hard. And I was talking to Aaron Day, or just passing some messages back and forth. We've been wanting to do a show together and on technocracy around markets, and I think this will be a good lead in for that. So I'm kind of excited to do some homework on that this weekend and watch through that, pull some clips out. And some of it's comical. To me, it's comical, right? Hopefully, it is to all of you guys too, um, because we see they're having to change their plans a little bit, right? I mean, they were going straight down the channel, and the weakness in Europe is causing issues. President Trump, the tariffs are causing issues. We talked about Europe kind of being on an island with this Asian trip. You know, President Trump goes over there, meets with the whole Asian front, talking about rare earth minerals, talking about the agriculture, talking about supposedly going to talk about chips. Didn't really these AI chips, these AI accelerator chips and so forth, NVIDIA chips and those kind of things. And then the other big part of this was the defense side, right? That was kind of spoken about, not totally spoken about, but I think it was the defense. We saw that in Japan, we saw that in South Korea, okay? And then I didn't really think things went that well with Xi. We're going to listen to Scott Bessent. He thinks things went great. I talked to a few people yesterday. They thought it was fine. They didn't sense what I sensed. But I just sense that it didn't go well, that there's tension there. And look, there has to be. President Trump, he has to back Xi in a corner, okay? Because Xi has this long-term plan. China has this long-term plan. What's it being driven by? Globalists, neocons, this war effort. The whole, even the tech community is sort of behind this, because the next war could very well be a high tech war. The drones and so forth. We talk about this Anduril, which we need to get. There's so many things to cover. It's just all we can do is whittle away at it. I mean, there's every day I think, oh boy, there's like 10 things we should cover today, and you just have to isolate it down and just kind of whittle away at this stuff over time. But that's the big thing for me is this Europe, and taking apart what Christine Lagarde's doing, taking apart what they're saying, and then more importantly, watching what the currencies are doing. So yesterday during the show, we talked about the currency market was getting hammered, the bond market not looking so good. Okay, stock market kind of hanging around those harmonic levels, right? The 6909 in the S&P, the 47,797 in the Dow, which we'll take a look at. And they became even more important yesterday, right? The Dow finally, the S&P was weak, or was below the 6909, and it really started to come apart. And late into the day before the earnings, right? So we got Amazon and Apple earnings out yesterday. And as S&P was falling, the Dow was trying to hang on above that 47,797. And then it finally broke, and it broke below. And then the earnings came out. The S&P rallied pretty strong. I don't know where it's at now. Let me take a look here, because it changes. The scope changes so quickly. So now it's back sitting. The S&P sitting almost right at that 6909, and the Dow is. Let me see if I can see the Dow here real quickly. The Dow is it? It's still hanging out below the 47,797. So there's clearly some kind of an allocation going on here, because I thought yesterday it was getting pretty clear. The S&P sold off. The Dow was sort of hanging in there, and I thought this is an allocation into the large cap stocks in preparation for something, okay? We're clearly toppy here. We have these harmonic structures. We've got this line in the sand. Again, if the market can find a way to hold above 6909 and the Dow hold above this 47,797, then there's a good case that this Dow could rally to 50,000 by year end, okay? We got the 50 basis point rate cut, all these different things, Now, I was talking to a friend of mine yesterday, and I was thinking, like, wouldn't it be something like how important are these interest rate cuts to this administration, right? Getting interest rates down. Would they potentially crash the economy? Not the economy. Would they potentially crash the stock market to get rates down? Because if the market came down, the Federal Reserve could get easily backed in a corner, right? With the narrative. Again, they're losing the narrative, right? They can't control inflation. They have no control of what's coming down the job pipeline. Not much control. If they've definitely lost control on the job side of things, and those are their two mandates: price stability, maximum employment, and the okay, so the S&P is looking a little bit stronger. I just got stopped out on one of my positions here. Okay, the so it's definitely above the 6909. The back on point, but loses my train of thought quickly. Okay, so would they actually take the stock market down to force interest rate cuts out of the central bank? This is a short-term pain, but could it be for a better long-term gain? Would they do that? Remember, 4 Fridays ago, President Trump came out 1057. I know I keep coming back to this, but then the market got hit that day. Okay, it came right back into this 65.90, 60, whatever that level was, old harmonic. I want to say 65.47. But I think so. 65.74. I think that was it. Anyway, that old harmonic level that we were looking at since May, that was that target got hit. And would they take this thing down, okay, in order to get lower interest rates and force this lower interest rate situation so they can restructure the debt? Okay. The problem is it's going to hurt the growth because obviously, people get scared and they retract their spending. And so the growth outlook looks worse. So they're in a bad spot. How are you going to get these interest rates? If these interest rates aren't cooperating right now, how are you going to get these interest rates down? And there might need to be some sort of, a pound of flesh that needs to be taken here at some point to achieve the bigger purpose. All right. And that's kind of where they're at. So we'll see what happens with these stocks. Are we going to get this? Are we going to top out here? The Dow is sitting right at 40. We'll take a look at that here in a second because it's kind of important. Looks like we're at an important spot here, at least, because I might add to this Dow a little bit, and I'm out of the S&P now. I only had a tiny little position on in there this morning, but we're at this tipping point. I think we're really at this tipping point in stocks. And remember, this was a big week. All these central bank meetings, the tech earnings, this Asian trip, the government shutdown. I'm sure that we could pile 2 or 3 more things on there if we really wanted. But a lot of stuff coming together at the end of this October, 1st of November. Okay. And so that was a big takeaway from this week, the central banks. We were supposed to get PCE data out today. And U.S. advanced GDP, I thought we were supposed to get that yesterday. I don't think any of these data points are coming through because they show up and then they're gone, right? They come off the board at least from the people that from Forex Factory, where I tended, it's just a nice layout. So I tend to get the data from there. So forexfactory.com. They also do an energy one. They do a metals one, and they do a crypto. So if you go to the bottom, you can find it. Hunt around on there. You can find the metals one, the energy one, and it's good. They show the economic data or the data that's going to have an impact on those particular sectors. So I mostly watch the currency because I think it's kind of it's what we kick the week off on Mondays. And I think it's one of the most important places to focus is on the currency because it tells us a lot more than other things. All right. So no PCE today, from what I can tell. That would be out. I'm not sure what time it would have been out. I think that's a later number. I think that one's a 9 or 10 o'clock number. So it wouldn't have been out at 8:30 anyway. At 8:30 anyway. And then nor will we get this U.S. employment cost index. But we will get a few data points. Let me just go to that. So here's let's look at yesterday's data. So again, we're searching for data, trying to find value in this stuff. But again, it's without U.S. data coming through, it's sort of tough. So, but here's a couple key things out of Germany wanted to look at. Preliminary CPI was up a little bit, 0.2, 0.3. Okay, so inflation's up a smidge in Germany. Germany's the powerhouse, the big industrial manufacturer, technological angle from the European. They're the powerhouse. They're the economy that mostly drives. It's the big driver of the European economy, right? When we aggregate this into the Eurozone. And then Spanish flash CPI was up a little bit as well. Preliminary GDP out of Germany was flat. This Italian 10-year bond auction, Went off okay. The yield was down from 3.62 where it was expected. It came in at 3.46 on the 10-year auction, but the bid to cover was down again. So again, I think overall, I would say the theme is that most bid to covers are coming in weak. We're not seeing big changes in the yield. The yield curve's been pretty flat, and that goes back to that 10-year note, right? That's riding that upward sloping trend channel that we talk about. Most debt markets have been pretty calm. We haven't seen massive moves in the debt markets. That tells us that something's probably coming into 2026. Okay. Are we going to see something crack on the debt front? And again, this is why we might have to take a pound of flesh in the stock market to try to get a reason to get these rates down. And once they get them down, I think they can hold them there. And again, this goes back to who's going to be the next Fed chair going into 2026. Okay. Is it going to be Rick Rieder? Is it going to be Kevin Warsh? Is it going to be Kevin Hassett? Is it going to be, Michelle Bowman? I'm trying to think the other ones. Anyway, that whole handful, that whole group, and again, that's going to get announced somewhat soon. I would say, again, they're interviewing them as we expected. At end of October into November, we're going to get someone November, December, somewhere in that time frame. Someone's going to be announced. I would say 2 to 4 weeks. We're going to get somebody that's probably announced in there. And will it have a big impact on the markets? Probably a knee-jerk reaction. When it comes out, there will be, oh, this is great, it's so-and-so. And then the market will fade off. That's probably what will happen. But again, that's another thing to keep in our mind as a trader perspective is these things that are going to get announced. And that's why I put some of these. There are times I put stops in and other times I'm not as good about putting stops in. But there are certain things, you should always have stops in there on things. Even though the problem with putting them in there is that they hunt them down. Okay. But these are the kind of things I keep in the back of my head. All right, this could happen. You're going to get a knee-jerk reaction. Try to control the loss and then let it go. And then maybe you can actually get a better entry price on this knee-jerk reaction from something. The worst is when you get taken out of something on a stop and then it goes right down and you're like, then you don't even get a chance to, you take all the loss on both sides of things, right? You don't get the gain and you take the loss. I mean, that happens sometimes. Okay, back to this point. 10-year bond auction out of Italy, not great. Bid to cover has been the issue on most of these things. People not wanting to show up to buy the debt. Okay, and there's no better place to see that than in Japan, as we talk about. They issue the debt, and the vast majority of the debt gets purchased by the Bank of Japan. Okay, and we'll see if that starts to change with this new leadership, Sane Takaichi and Ueda, and see how Ueda at the Bank of Japan responds. We did get this Tokyo core CPI that came out a little bit stronger than expected. This gives them the ability to think about raising rates again into the next Bank of Japan meeting, which is going to be probably, I don't know. I think it's also in December. I'm not sure when the next Bank of Japan meeting is. It tends to mimic the U.S., so it'll be close probably to our next meeting. And so and again, they've held 6 times in a row. Okay, so they're in this increasing rate environment to try to get demand for the yen, trying to stabilize their currency, but also to try to change the way Japan is thought about on a global front. Instead of just sort of being used and abused for low interest rates, that they're trying to show up again in the financial economic world and be not get used and abused. All right, I guess is the thing. If they get interest rates up, they're not going to get used by the carry trade hedge funds. And they actually, maybe someone will actually show up to buy their debt if they can get things under control. Again, a lot of these things boil down to, is this Takaichi going to create confidence in Japan? All right. And the natural gas storage was pretty much flat. We've been talking about that. I want to do a story on that next week. We dipped our toe in on this Israel, Egypt, and this whole thing that Israel's fighting in the Middle East. And what's their agenda? Why are they doing this? What are the Saudis doing? I think it's important to understand that because that is what goes on in that area. Now, Israel has a pretty significant tech component to it, but I think they're also trying to get control of the energy flow through that region. And that's why they're, stirring all this stuff up over there. So I want to do it for myself, but I think hopefully I can consolidate this story down into something that's pretty easy to take away for us. So it's like, okay, we've got the U.S., we kind of understand what's going on, we're able to monitor that, we kind of know what's going on in the Middle East, who's doing what and why, and we just attach to it, right? Try to create some sort of a core structure. And then as things come out, we're like, does that make sense? Where does that fit on this whole structure? Because I don't really understand the Middle East. It's fragmented for me, right? I've got bits and pieces of this, but I don't have a good grip on, I know a lot of the history, but I don't know like where we're at now and why what's going on is going on and who's doing what and why. China, Russia, India, Turkey, Israel, um, in Egypt again because they control the Suez Canal. That's where they get a lot of their revenue from. So again, looking at all these players and trying to get a good grip, looking forward from this energy perspective. We did get a couple earnings out on the energy front. Chevron and I think I want to say Exxon both came out. I don't have the information on those. Maybe during one of these clips, I'll take a quick peek at it. And we can come back and look at that if we look at the energy chart today. Okay, so that pretty much covers the big picture from Thursday, I think. And then here's today's data. So we had Swiss retail sales again. Watching this Swiss franc, I don't think that did they really come in at 1.5. Let me double check that. I may have transcribed that wrong off of here. Let's see. Where did that data even go? Oh, here it is. Yeah, it is. That's actually correct. 0.3 was where it was expected, and it came in at 1.5 on the retail sales. Year over year for Switzerland. That's a pretty good number. Okay, that's pretty strong. But the currency doesn't seem to think so. I mean, the Swiss franc's been getting hammered the last couple days. Okay, but again, very positive number. And then out of Europe, the core CPI flash, another CPI read, pretty much flat. Italian preliminary CPI down a little bit, so mixed numbers. Today we get Canada GDP out at 8:30. See what that does. That's three minutes or so. We'll see if anything significant comes out of that. And then now we get this Fed speakers. Okay, we get Logan, Bostic, Hammock today, and then the Chicago PMI. That's a Purchasing Managers Index. That one can have an impact on markets. So again, now that these markets are sitting on this hinge point, is this numbers like that can make things move? Something that really influences stuff, maybe, right? If it's a significant move. So in this particular one, if this thing for some reason climbed above 50, that would be pretty significant. And maybe it does have some sort of a lasting impact through Friday into the early part of next week. So again, a potential that this PMI number will actually mean something. Okay, headlines. Let's just look at this real quick. Government shutdown day 31, and then the recap on Lagarde. I think we hit that. I want to go through and recap that this weekend, and we'll do that on. That's a perfect thing to do on currency because it brings a lot of this stuff in, right? Currency debt and also this digital currency that they're trying to push. All right, let's jump over and take a look at some of these charts. I got to do this different today. Okay, here we go. Let's look at this. So this is the S&P, and let's just walk through this. So this is that line that we've been talking about. Let me, that looks like a good spot. Okay, and Trumpet, I saw your note in there yesterday to put a title on all these charts. I'll do that on the longer term ones. That's a great point. So here was my thinking on that. I'll do that on the longer term stuff like the dailies, the weeklies, the monthlies. The problem is when we look at some of these tick charts like these, this stuff moves so fast that I'll just spend so much time, I'll try, put it that way. I'll try to see if I can't label this. Like this is the S&P 500 futures. I usually try to announce that. So if somebody wants to go back and watch it, at least it's labeled what it is and we're talking about it. But I'll try to put the things on here for these tick charts. The problem is it's kind of like, it's moving. It's kind of like the ticker tape. We run that ticker tape. It just keeps moving by relatively quickly. And, it's just one more thing to constantly update. And as you can tell, I already have issues. I have issues just keeping these charts cleaned up. And I mean, I need to spend literally, I could put on some tunes, on a Saturday and go through and I could spend 5 hours just cleaning up easily. I mean, I could do it 5 hours on a Saturday and 5 hours on a Sunday, just cleaning up charts. But great point. I know I need to do that more. And, but for the daily, weekly, monthlies, for sure, I'll do that. Even the 4-hour stuff. When we look at 4-hour stuff, I'll do that as well. I'll make sure that I start putting that on there. I'm getting more efficient at other things, so I'll do that. But on these tick charts, no, I can't promise it, but I'll do my best. Okay. So this is the S&P. This is that 6909, that white dashed line. Remember, that was a target. Got up here, back in this area, and hit this area a couple times. Okay. Was resistance, got above, became support, spent some time above there. And this is working off that 65. I don't know if that's still on here or not, too. It's way down there if it is. All right, we'll just leave that alone. It's not even in our radar right now. But here's the thing with this. This was the Fed. So this 6909 to me, just looking at it, I think that, let's look at this. Well, okay. How can we portray this? This market's been moving up pretty strong. Okay, we've had a couple of these harmonic structures. Let's see. It's 8:30. Let's see if we get some data. If this Canadian GDP is worth looking at. There we go. So here's a Canadian GDP, came in at minus 0.3% versus 0% estimate. Year over year, 0.7 versus 0.9. Month over month revised higher from zero point 0.2 to zero point 0.3. So I'm not sure how that, sometimes these are the confusing things. It's nice when you get the month over month lining with the year over year, but that's not a good read. Okay. August GDP month over month is down minus 0.3. So that's basically recessionary, right? GDP, not only is there no growth, it's negative, right? I mean, they're retracting. So this isn't good for Canada, and this is this is where this goes back to, President Trump's ability to say Canada might just become a 51st state at some point. If we can, he knows where they make their money, okay, and they are probably making most of their money on parts coming from China. There's obviously an agricultural component to Canada as well. Okay, there's agricultural component. There's a fairly good sized energy component, right through the Midwest, this Calgary region, and then there's just regular commerce, okay? But generally speaking, I think Canada was making a significant amount of money from the automotive industry, and a lot of that was coming from China going into the US, all right? And going into Canada as well. So what kind of deals were made there? What kind of a trade? That's the thing we don't always think about. We think of everything from the US's perspective. Sometimes it's good to say, okay, I'm in Canada and I'm looking at this from a Canadian perspective. Obviously, we're passing Chinese goods through here and sending them off to the US and making profits off of it. And that's what a lot of our companies are making their profits off of. But that being said, what kind of deals are we getting out of China because of that, right? A quid pro quo, this for that. And it's hard, but it's hard to take those perspectives, from all those different angles. But I think this is a really negative number for Canada, and Carney's behind the eight ball. I mean, this guy is just, it's. I mean, look, we love our Canadian friends to the north, right? But it's almost funny to watch Carney, okay, get blown out of the water like this, because we know that the World Economic Forum type people, the globalists, sent Carney in there to do the job that Trudeau couldn't do. And now he's failing just as bad as Trudeau. So they sent their best and their brightest, right? This guy's a total globalist, works for Bloomberg. He's worked for the Bank of Canada, the Bank of England. He said he's not even maybe a Canadian citizen. He's a European citizen. I mean, this guy, he puts on a good show, right? Carney puts on a good show, okay? But this guy feels to me like he's a chameleon. And it is nice to watch him get smoked. And there is some pleasure in this. Sadly, I don't mean to, again, we love our Canadian friends of the North. It's the government. I love to see them get smoked. And this is Carney getting smoked, okay? He's in big trouble, and numbers like this don't go well for him. Okay. All right, so that's that. And that fits with the theme we've been talking about. That's nothing new to us there, okay? But again, this is just more confirmation, just piling on. Okay, back to what we're doing here on this. Let's take a look at this again. Back to the S&P. My point is this, here's the point. This will help me solve this too. Okay, so this market's definitely been moving up, and this 6909 is becoming an issue for it, okay? It's not perfect. We can draw lines. I put these purple lines in there, your purple shaded areas in there that show, okay, some resistance. But then this was the Fed. Okay, this was that big day with the Federal Reserve and China and all that stuff going on, leading into China. And there's a lot of chop around the 6909. And then you can say, okay, well, I don't know. I'm not convinced of that. Okay. But then you see it go and get below, and it retests and it retests and it retests. And then you see this morning, now it's popping back through. So the 6909 seems to me, we kept saying this, back in here, this should become it should have some level of importance. And is it going to mark a top in this market? Is this going to, the energy's coming out of this, or is this just a consolidation again? I can't put it in there because we don't have that. Otherwise, I'd put the Elliott wave stuff below us again. Can we get that second wave down? We keep getting wave one down, consolidation, wave one down, consolidation. And this goes back to those Fridays, right? President Trump, 10:57, releases that data. Market goes down. The next Friday, the market goes down earlier in the morning. The next Friday, market kind of hangs in there. And then we get that gap up again because Besant comes out and says, you know, China everything's looking great with China. Okay, and we'll get to his clips here in a second. But this is last weekend. Everything's looking great with China, and the market takes off to the upside again. So we just can't get that second wave down. So there's no directional downside to be found yet. Will this 6909 start to set the tempo for that? Will it change things? Is this a turning point, a tipping point here for these markets? It just keeps, fiddling around with these levels, and we have to be careful here. Now, patience for a trader's perspective, patience usually pays off if you can just kind of hang in there and grind it out. At some point, this thing will make another directional move, and it, we know there's good things if we start back on the upside. The Dow is probably, to me, the easiest conceptual one to go after because the system would love nothing more, and people will gravitate toward and pile on to Dow if heading toward 50,000. You start getting to 48.5, it starts a little bit of discussion about it. Can the Dow hit 50,000 by year end? Then it cracks 49,000. And it's like, wow, the Dow's only 1,000 points. And this market can close down 1,000 points in a day anymore, right? That's what, a 2% move. Any good news in this market can go into a feeding frenzy. And why does this matter? Because again, performance into the end of the year. Will we get performance chasing it into the end of the year? If we get 50,000, going into late December, I think it sets up for a potentially really bad January, February, March into next year because, again, it's the hangover, right? Everybody's drunk on the 50,000. And it would be something, though. It would be fun while it lasted. Obviously, the New Year's celebration, 50,000 into the year, it would be, and could we hold it? That's the thing. Could we hold this 50,000? So let's take a look at that since we just keep talking about it. Let me pull that up. Here's the Dow. All right. And here's this 47,797. All right. And it's just hanging around there. And so this one to me was a little bit more obvious that this 47,797, got up here back in this area. Okay. Right there. Got up there again, punched through, came back, retested it. And then we went through this whole Fed thing and it went sideways around this, between the 7/8 and the full upside objective. It kind of hovered around there. Then it had that big pop again. Definitely divergent on another. We had big divergence in here. Okay. And then we had a little bit of divergence in there. And then now we sit right at this 47,797 in the Dow. Okay. And, so I don't know. I could go on for an hour on this and just, contemplate this, contemplate that. And that's what I do during the day. I don't really know right now. Obviously I had a small bias to the short side, a small short on in the Dow, and then, and then I had a small short on in the S&P, just trying to test the waters in both of these. I'm trying to stay away from the NASDAQ right now, just with all these big tech earnings. And it's a dangerous place to be sometimes. And then the Russell, I'd love to move into the Russell 2000 if we saw any kind of anything really looking good. All right. And we look at this Russell and I need to get moving here so we can get to some of these clips. But the point is, this Russell climbed above that pink. This is the Russell on a daily. This is perfect for Trumpet. This is the perfect case in point where it would be nice to see Russell 2000, weekly chart. So I'm totally with you. On this particular case, we have three highs, the pink line going across there with three yellow circles on it, and it's climbed above. So the Russell is above, and it is at all-time highs or riding all-time highs, but it's just not showing that enthusiasm, okay, that we would love to see, like the NASDAQ, like the S&P has. Those two have been the really strong movers, and we've seen little bits of action out of the Dow. From time to time, we'll see the Dow show some kind of, yesterday, we were seeing some kind of outperformance on the Dow, and it really didn't want to give that up. And then at the end of the day, the S&P was just getting pulled down, below that 6909. It was getting pulled down into earnings, and the Dow finally gave it up. Now it's sitting below that level. So we're right at this tipping point, and the markets are telling us that, okay? And no surprise, because we knew the end of this month, 1st of November, was going to be a big deal for all those reasons we've talked about. Okay, so I think we've hammered all that stuff. Let me come back in here. I don't think we have much to do on. I think it was this one. Yeah, this one. Okay, so ECB. Oh, so let's do this. Recap the Asia tour with Scott Bessent. All right. So this is Scott Bessent, and let me oh boy. Okay. Let me just set this up. So the Scott Bessent is here. He is. We're taking a look at this from his lens of how this Asia trip went down. The rare earths. So the Asian trip mostly focused around China, the rare earths, and then the government shutdown. That's what we're going to look at with Scott Bessent. This is the first one with him recapping what happened at the China meeting and how he, again, it gives you an idea of how these guys go ahead. They set it up. They pretty much pound through the heavy stuff, and then it's mostly a formality between Xi and Trump. And that's why, to me, the meeting happened. What I'm curious about is the body language. And to me, I just didn't get a good read on the body language out of either of them.
All the congratulations should go to President Trump. He has a fine relationship with President Xi. The mood in the room was one of great respect, but also between two men who knew each other quite well and knew what they were getting into. I think what was very helpful for today's meeting was my counterpart, the Vice Premier, Huli Feng, and I had 2 days of very tough and fulsome negotiations in Kuala Lumpur, Malaysia, earlier in the week. So President Xi walked in the room and said, I think we can agree on the consensus reached in Malaysia. And so the two leaders were able to discuss more bigger picture ideas during the conversation, including what the remainder of President Trump's term would look like, because I think the Chinese realize that with President Trump in office, it is an opportunity to reset the relationship in terms of mutual respect. President Trump is commanding respect around the world like no other leader.
Okay, so there's a recap on what happened at the China meeting. Bessent saying the Chinese are they willing to reset this relationship? And that's the key question. I really think he's onto it there. Are they ready to reset this? I didn't perceive that out of President Xi just from his body language. But, let's hope, right? That's the key. Can they, they both say, President Trump says they have a great relationship. Here's Scott Bessent saying they have a great relationship. I'm just not believing it. But anyway, that's that. Okay, so here's Scott Bessent now talking about giving us a rundown on the rare earths. We know that this is a huge part of this whole Asian tour, was this rare earths.
The president has been laser focused since the day he came in office in terms of rare earths. He issued an executive order right out of the blocks. He recognized that this is a strategic vulnerability for the U.S. The Chinese control about 70% of the mining, but more importantly, they control about 90% of the processing and refining. So since January, President Trump, this administration have been working to stand up facilities where we can refine and process rare earths. I think it is something that we inherited. This was a mess that's 20 years in the making, and President Trump is determined to solve this because we have to take control of our supply chains. And we're going to be taking control of our supply chains in rare earths, in semiconductors, in medicines, in steel, in shipbuilding. Part of the America First agenda that President Trump is pushing is for us to be able to control our own destiny and not have any choke points in our supply chains like he inherited.
And that's exactly what we want to hear, I think, right? We want to hear that we're taking control of this. I remember being around some old timers when I was younger, and they would say, we don't even make screws in this country anymore, and bolts, nuts and bolts. Like, what are we going to do if we ever get into war? Now that, that's been 40 years later. But again, this is getting more significant. I mean, the risk is higher when you're counting on these high-tech rare earths and all this stuff for, for automotives, for technology, as we move into this, we're spending trillions of dollars in this AI front, and we need to have the ability to control the supply chain and know that we've got this stuff. So this is the stuff we want to hear. All right. So that's good out of Scott Bessent. Here he is talking about the government shutdown and how much of a global embarrassment it is. And I think this is just him kind of piling on, but it is. I'm not sure that the world looks at this. I mean, come on, Joe Biden was a global embarrassment. You know what I mean? Like, J6 was a global embarrassment. What else can we pile on? These are all global embarrassments. Again, I'm not sure that this is him kind of piling on. I'm not sure that, that it's really a global embarrassment, but anyway, this is his perspective on this government shutdown, and this is heating up, okay? I guess that's the point. We knew that after this Asian trip, this is going to become more central focused, and it will after this weekend with people losing food stamps, all that kind of stuff. This is going to end the healthcare enrollment situation that affects more the middle class. So this is starting to affect Americans and polling numbers. And the question is, who can pile the most on the other party? It seems to me the Republicans are winning, piling it onto the Democrats because they're desperate. And they're trying to pull, a rabbit out of a hat here, some kind of a magic trick, right, to change the poll numbers for them. And it's probably just going to be a last-ditch effort that's going to drive them in the ground. That's good and it's bad, okay? There's good to that for sure. Obviously, it feels good, but there's bad to that because it creates a vacuum. And so here's Bessent talking about this government shutdown and how much of an embarrassment it is on the global front from his perspective.
The contrast could not be more marked that President Trump comes out to Asia, and I think at the end of the day, just this trip alone may end up in $2 trillion of investment. Then we go home, and the Democrats have decided, because of their poll numbers, because I don't even know why they've decided to keep the government shut. If you look, the vote is 52 Republicans have voted to reopen. 3 Democratic senators have done the brave thing, come across the line, and we're coming home. And it's a global embarrassment that these Democrats are doing, and I think part of it is the mainstream media is not holding them accountable. If the Republicans were doing this, anytime the Republicans have refused to reopen the government, the amount of the terrible press that they get from the mainstream media is borders on hysterical, and where's the fairness here? And you're right, Maria, we are starting to eat into the economy, and imagine this: the day after Thanksgiving is the single biggest travel day in America. And as you said, airports are starting to close, and when families are not able to get together, they are going to blame the Democrats for this. And I hope that they will hold them accountable, and they should be ashamed of themselves.
And I'm glad to hear him piling on the mainstream media. You can't pile on them enough, okay? Whether it's Fox, obviously he's on Fox with Maria Bartiromo there, but just to pile on this mainstream media as much as possible, I think is so important because they don't cover this enough, right? And they're very picky and choosy about what they cover. And again, that's part of our job, is to hold them accountable. And either, and here I am, now I didn't, I don't really watch Fox, but yet, I take the clips from there because you're just looking for Bessent. Like, I'm not watching Fox. So look, they have the power, right? You can't deny that the mainstream media gets the interviews, and I can't get an interview with Scott Bessent. I can't, unless I go to his house, me in South Carolina and hang out up front, maybe I can get it on my iPhone, but I can't get these interviews. So again, we're relying on the mainstream media. How do we hold them accountable when we're relying on them to run this clip? I scratch my head all the time. You go around in circles, like, how do we dodge this? How do we get around it? Okay. But nonetheless, I'm glad to hear him piling on the mainstream media. Again, whatever that is. All right. Okay. So here's a lens. Let's take a look at this from the lens of Brooke Rollins, the secretary. That was the Secretary of the Treasury, okay, from his perspective on a couple key things: Asia, rare earth minerals, China, Asia, rare earth minerals, and the government shutdown. Here's Brooke Rollins. We're going to kind of pick it up there as well with the government shutdown. Here's her perspective, again, with CBS. She's getting interviewed with CBS. So, again, we're relying on CBS again. But she's talking about this government shutdown. We got 4 or 5 clips here. I want to go through these because it leads us right into the agricultural space. All right, here we go.
We need to level set this entire conversation. On October 10th, we said there will not be SNAP funding on November 1st. On October 24th, we said it again. We've been talking to the governors all along the way. None of that has changed. To fully fund November, and you mentioned this, but to fully fund it would be $9.2 billion for the 44 million Americans that receive the SNAP benefit. When you look back to when this entire ridiculous conversation that we're having over keeping the government open, as that began a month ago, and the Republicans said, just keep the government open. We can continue to negotiate about health care for illegal aliens and LGBTQI programming in the Balkans and all the things that are on their list. We'll talk about that, but let's not shut the government down over that. And 12 times the Democrats have voted to keep the government closed. All of this ends tomorrow or today or Thursday. If the Democrats would vote yes, the $9.2 billion would flow, the air traffic controllers would get paid, the food safety inspectors would get paid. You know, I find it very rich that Chuck Schumer and AOC are getting paid, but not the security that keeps them safe. So no, to answer your question, we have said all along that $5 billion in contingency, we don't believe we have the legal authority to distribute that. We're trying to follow the law here. We've used Band-Aid and duct tape all along this whole last month. And as we've said, it's not going to be there on November 1st. It's time to open the government.
So
Okay. And so now I think what we're going to go into is where she's talking about there's more than politics going on here. The $9.2 billion to fully fund the SNAP benefits. And again, we know that there's tons and tons of politics going on here. And so I think that this is the right one here. 1, 2, 3. Okay, this should be the right one.
you say you're playing politics with Americans' hunger when you could figure out a way to do this. You say what?
I find it extremely rich that people would say that President Trump or our administration is playing politics with people's hunger when Catherine Clark, one of the leaders of the Democrats, said, oh, we've got great leverage, y'all. We're going to use the poor people and the impoverished programs to get what we want on illegal alien health benefits. Or Chuck Schumer, who said every day that goes by and the more people hurt, the better for our side. Isn't this wonderful? And the staffer who said, let's wait for the planes to fall out of the sky and then maybe we'll reopen the government.
No, I get
will say, I've been doing this a long time. I've never seen this sort of completely irrational, unreasonable approach to this. Republicans aren't even asking for anything other than to keep the government open.
Right.
So to blame it on our side, I find extremely incredible.
Well, again.
Okay, now on this one, this is great, right? Here she is. She sets this guy straight on where this money's coming from. This $9.2 billion, okay, the money to keep the military going, because he tries to pick this apart and says, well, if you're moving money around to do this, then how, you should be able to move money around to feed these hungry people. And she puts it right back on him. Well done, Brooke Rollins. And I think this is the right one. Let's see. Yep. Here it is. This is the right one. I'm pretty sure.
At the end of the day, this is a congressionally authorized program. We are enacting Congress's will at every step. That's what we're working to do. If Congress votes yes, if Josh's bill is successful, then of course we will move that out and move it
I'm going to
forward.
switch it. This is the
And
right
you've
one.
moved it around to pay for the troops, and you've moved it around to pay for the FBI, and you've moved it around to keep other elements of the government open. So why not, as president, as budget director, and as agriculture secretary, say, you know what? We're going to find a way to let people eat starting Saturday and Sunday while the games get played up the street. And the blame will be sorted out by the American public. But you have this immediate need, 42 million people, 12% of the country that could go hungry starting Saturday, when you have the ability to do something about it right now.
Well, I don't agree with that. We do not have the ability to do something about it right now. Paying the troops was someone stepping up, an incredibly generous American patriot who said, I'll write that $130 million check.
So why not find a private donor to help pay for people's food?
Will you help me do that? $9.2 billion, you know, maybe George Soros or someone like that will say, you know what? I have been funding these left radical agendas for so long. I'm going to now use my money to help people eat. But this is so easy. All we have to do is vote yes on a continuing resolution. Why won't the Democrats do that? Even their own labor union is saying, please, for the love of God, vote yes. Let's get this government back open and start serving the American people once again.
Well, that there.
Okay, so I think it's great she's calling out Soros. This is what we need more of. Again, remember, Soros was made a lot of money by Scott Bessent. Okay, so there's a very tangled little web here. But I love the fact that she's calling that stuff out. Okay, here we go. This is Brooke Rollins talking about Josh Hawley has this plan out, but this leads into the whole agriculture space and the livestock. I think this is the one where they get into the Argentinian beef. So this goes back to, remember, we've been doing this debt swap with Argentina. Okay, again, why? Put pressure back on China, you know, get the communism out of South America, shut down the drug trade, lots and lots of stuff going on in South America. But this beef trade, this beef situation has been interesting too. And here she talks about that these bringing the cost of goods down, okay, beef prices are high. We'll take a look at that chart here in a second. I think it's record. The problem is that all these ranchers have been going for all these decades, you know, fighting against low cattle prices. Finally, they're getting high cattle prices. But guys like Bill Gates and China and, what's the big, I'm trying to think of the big Smithfield, all these interests that are taking part in U.S. agriculture and U.S. livestock and U.S. ranchers has been really taking the, you know, now that the prices are high, it's not the ranchers that are getting healthy out of this, right? Everybody gets their day in the sunlight, you know, you hope, right? The ranchers have been taken out of the game because they've been driven out by so much attrition through the years that it's really rare for a rancher to have been able to last through the last 20 to 30 years. I mean, it's been very, very tough on them, very tough. It's a losing money. Like they were not making money many, many years out of that 20 or 30 years. Now that livestock prices are really high, the problem is the game's been shifted, okay? It's a lot of these outside entities that are benefiting from this stuff. Okay, so here she is talking about that, Josh Hawley's plan, okay? And then also I think this moves into that, I'm hoping this is the one that moves into the Argentinian beef concept. And the way this works is, I think she says we consume 12 million metric tons of beef, about 9 to 10 million that we produce, and then we import another 2. And this isn't out of the ordinary. This has been happening. The question is, do we get it from our buddies in Argentina, and we start exerting influence in South America instead of China exerting influence? Okay, so that's kind of the game that's going on here from my perspective. Here she is talking about all that.
At the end of the day, this is a congressionally authorized program. We are enacting Congress's will at every step. That's what we're working to do. If Congress votes yes, if Josh's bill is successful, then of course we will move that out and move it forward. Okay. But again, open the government. This is not hard.
The president's talking about allowing the import of Argentinian beef to help lower costs for Americans at the grocery store. Says it'll drive down the costs. American beef groups, associations are disputing this from your home state of Texas, among others. I want to read you something that an Iowa farmer told CBS News this week regarding the beef decision. Quote, I thought the whole point of tariffs was to bring production back home. And now he's trying to do something to destroy that production, the farmer said, adding, it feels like being a pawn in a game we're not going to win. We're being used and abused as producers, the farmer added. Why do this? And what would you say to that Iowa farmer?
Well, here's the thing. The president made he made a lot of big promises. A lot of them have already been achieved, but he promised to secure the border and to bring the cost of goods down. Under Biden, they were up 20, 30, 40, 50%. You know the numbers too. So secured the border. I think we're in really good shape there. The president's very proud of that. A lot of the economy has begun to adjust and will continue to adjust to these tax cuts, to a smaller government, to a more robust private sector. The costs will come down. down. Inflation's already slowing down from where it was previously. So this will catch up. But as with regards to beef, that's why the president is very focused on this. And when he talked about bringing in, for example, Argentinian beef, what people need to understand, and I know there have been a lot of frustration on both sides on this, and on our ranchers as well, is that currently America consumes about 12 million metric tons of beef every year. 10 million we produce here in America and 2 million we import. And this is not new. We've been importing beef for a long time. The Argentinian, and by the way, the beef that we import is the lower cost beef, the ground beef, the beef that McDonald's and Burger King may use to make their burgers, etc. So what the president was talking about is perhaps increasing the Argentinian beef into America. But right now, we only import about 20,000 metric tons of that 12 million. These are not mutually exclusive goals. We have to open up our ranch lands. We have to incentivize young ranchers. We have to rebuild the beef herd. We've got a lot of challenges. Screwworm down in Mexico. We've closed the ports. No new beef's coming in from the south. And so we're working through all of that. We will get there. Beef will come down. Our ranchers will be supportive. And I think that we're going to be able to move out of this in a really positive way.
To the farmer.
So if you recall, when they first came in, egg prices were really high, and President Trump gave her the mandate to get egg prices down. And they had to do some crazy things, but they did get egg prices back down. Again, it's just these imbalances that were created, and they were probably all on purpose, to wipe out the chicken stock, wipe out the beef stock, the beef herd, like she was talking about. She's talking about the right things, okay? And again, calling out Soros, calling out the globalists, calling out, and I think in this one we hear her talking about the irony between this, how this is a good one. Let's just roll this clip and we'll come back and finish that thought. Here we go.
You say what?
That couldn't be further from the truth. If you think about what President Trump has done for our agriculture community, how he has deregulated, how he has cut taxes, how the One Big Beautiful Bill increased reference prices, how he's been negotiating 24/7 to open up markets around the country, how he has fought for private property rights. When you think about what a President Kamala Harris would have done to our farmers and ranchers, they don't even like crops. They don't even like cattle. They're worried about climate change from methane emissions from cattle. They were closing the markets down to make sure we import more and more. To that farmer or that rancher that may be frustrated or that doesn't understand what the president's talking about, I just say, look at his record, look at the history of standing behind our ag community, our rural communities. No one has done more than President Trump to date for those communities in my lifetime than this president has.
Is this U.S.?
Okay, so I like that series of clips because, again, Besant finishes up China, rare earth metals, government shutdown. We pick up with her, government shutdown, moving into the agricultural space, moving into, feeding people, them trying to blame it on this administration, that they should just be able to move money around, her calling that out, right, saying you just don't move money around like that. That was from a donor, and then calling out Soros, right, which again connects back to Besant. But then talking about the beef herd, great, right? And then talking about the globalists, and this methane, right? The whole thing about, cow flatulence, and how that's creating this global, global warming issue, which, come on, I mean, get out of here. Like, that's the craziest thing I've ever heard. I mean, we had dinosaurs that were creating more flatulence than the beef herd, you know what I mean? And it didn't destroy the ozone, So this whole thing is nonsense, and I'm glad she's hitting on all the right points. A lot of people don't like Brooke Rollins, but I've always been okay with her so far. Again, what needs to be done? Well, maybe she's doing it. Okay. There are things, again, she's working with, Human Health Service, with RFK Jr., that was a great thing that they were coordinating. I don't hear enough of that. I wish we heard more of that. But again, sometimes you talk about it and then you got to go do the work, right? Doing the hard work is, that's the hard part. That's the part you don't hear about. Maybe all the hard work's being done behind the scenes, but from a front-facing standpoint, she's hitting on all the key things, and she's not afraid to talk about them. And I love that. I think that's great. Okay, so let's take a look at a couple of these charts here. We've got, let me clear this stuff off. Okay. All right. And then let's take a look at this. I want to go through a series of these charts. Let's take a look at the, where did my mouse go? Okay, here we go. All right, so let's look at this. Let's go to, okay, so here's corn. This is that situation we've been talking about with corn, all right? We've got, this is a monthly on corn. There you go. trumpet. I would like to say I did that for you, but this was already on there, so I'll work on that this weekend. All right, but this is the concept with corn. We have this upward sloping trend channel. We can see the reactions to it. I've marked them with these yellow circles. It's been pretty good. It's been a pretty good structure, right? We're at the bottom of that. We talked about this, I don't know, a month or so ago, I'd say at least 3-4 weeks ago, where corn was at this spot where we want to take a look at it. It looks like it's coming up off the bottom. Corn is going to go up with soybeans, right? These things are connected, especially corn and soybeans. Wheat, not so much. Wheat kind of does its own thing sometimes. But corn and soybeans, so if soybeans go up, corn is going to kind of come up in sympathy. All right. One drags the other along sometimes. And again, we talked about the corn and the great question with, it goes to fuel and the RBOB gas, RBOB, and the connection to that, of integrating the ethanol with that. And we note to me, we need to stay on top of that whole thing, right? And see what's going on with the corn side, because it's important thing to regularly monitor. Okay, but anyway, back to the point. Corn is looking fairly good. It's coming up off the bottom a little bit. It's a trading place down in here. I wouldn't load up on it down here. I would just try to start chiseling away. Buy a little bit. It goes up, sell a little bit, right? So let's take a look at this a little shorter term. Let's look at the 4-hour chart on this. So you can see this is a 4-hour chart going back to like August. All right, so I think I would like to say that we called it here, and said, let's buy corn in here, but I'm not quite sure that we did that. I don't know when we talked about it, but corn, the bottom line is corn hasn't moved up very much off that upward sloping trend channel. So I would like to say that where that yellow circle's at is where we came in and said, buy this corn. I can't remember when we did it, but the point is, you've had a chance. Let's say that you did, okay, and you were looking at that chart. It could have very well occurred. You'd come in, you buy a little bit, it rallies, you sell a little bit, right? Ideally, a couple days later, a couple weeks later, it comes in, makes it, pulls back. And again, this isn't easy, right? I don't want to oversimplify this and make it sound like it's a piece of cake, because it's always easy to look back at something and say, oh yeah, you could have bought here, sold there, bought some more down in here, and so forth. But you can fall into a rhythm, all right? And so without having all the tools, that's what I'm hoping to try to bring in time, is some of these tools to us that are automated, and I fill the gap. But what I'm trying to say is, you just have to, if you're trading from the gut, okay, you can either trade from the analysis and do all these little things like I do, or you can trade from the gut, right? And if it's a good idea and it's a longer term idea, then what you can do is buy a little bit, and then when it goes up, sell a little bit, right? And then you're like, wow, look at that, I can get it cheaper, quite a bit cheaper. Again, from the gut, looks pretty good. I got the big picture in mind. I know what's going on, bigger picture. It's coming in. I can buy a little bit more, right? With the idea that over time, if this thing works, okay, you will get bailed out by the trend. No matter, even if you do a bad purchase and you're like, oh, that wasn't a great buy. It came down, it went down even further. Or I had an order in, I was trying to be, and I missed it. That's okay. You're going to get lots and lots of opportunities. If this thing's going to work, there's going to be countless opportunities. If that corn's going to go from, the lower left to the upper right, all right, I think this is the chart. Yeah, you can see there's those yellow circles that I have out there in space. I mean, this thing has a lot of room, okay, to go if this is going to be some kind of a bottom in corn. What's going to drive that? We could get into all kinds of theories around that. Demand, global demand, U.S. Again, is President Trump working for the farmer? Are they going to try to help establish higher prices for the farmer? If they do, that's going to lead to higher input costs for the feedstock, right? For the beef. And the chicken and so forth. Again, the corn. Some of the corn goes to energy. Some of the corn goes to feedstock. Okay, feeding cattle, feeding chickens, feeding that kind of stuff. Right, the meat side of our economy, of our agricultural space. So that's corn. Let's keep moving here. We've got this 21. Let's go to wheat. You can see this one is wheat, and it's pretty depressed. All right, we got this. We had this. This is one I was talking about. That I talk about this one a lot because you could see this big energy build that back in this area that went from 2019 until 2021. So a 2-year energy build. I refer to this when I refer to the Swiss franc, right? We've got a big energy build in that. You can see what happened is the energy released on this in wheat, right? It went pretty quickly, it kind of gradually went up, and then you have this big quick spike in here. This was off the war with Ukraine. Okay, and you had this move from $8 a bushel to $13 a bushel very quickly. Okay, and then it all came off. Okay, what does that mean from a war perspective? It just means the world's readjusted to not needing as much agriculture or wheat out of Ukraine. All right, that's what it means to me. So wheat's pretty depressed, kind of hanging out back where it's always been. We're actually getting another energy build in it. You can see that other blue box, same kind of a thing. Markets breathe in, markets breathe out, breathe back in again. What's going to be the next move on this? I don't know. I mean, this one could be just choppy, okay? Because not all the time do you get an energy build and then bam, energy build. It's usually if you get 2 or 3 energy builds and it doesn't work, the third one builds up even more pressure, okay, and more release. All right, so there's sort of a gut feel to some of this stuff too. You're like, I don't know about that one. This one looks real, and that's what I'm saying with the dollar too. Like these energy builds in the dollar feel real to me because there's been a lot of false starts. All right, so I know I'm connecting a lot of things here, but that's wheat. Wheat's pretty much just depressed. All right, let's take a look at this. Soybeans. Lost my mouse again. Good grief. Where did this thing go? There it is. Okay. Okay, here we go. So this is the soybeans. I marked these other structures on here, the upside halfway. You can see it's kind of hanging out around there now. Made a move, up to the halfway, up to the 5/8 and up in that area, and back down to the 1/8, 1/8, 2/8. Now back up above halfway. Look, we would have loved to have picked this thing up down in here. Okay, again, the contract rolled, so this is a little bit distorted. We went from the November contract to now the January contract. This January contract doesn't last very long. They'll roll over to the February. Then I think they go right into the April contract with this, if I'm not mistaken. But again, it would have been great to get a nice push down in the soybeans ahead of time, but we didn't get it. And now it's like it's above the pink shaded zone. This goes along with the trade negotiations out of China. It's one of the key things that we did walk away with was agreement to purchase more soybeans and sorghum and so forth, like we talked about yesterday. We'll see how this gets enforced. I do believe President Trump will enforce this with China. The question is, what are we giving up on the other side? And is this a temporary Band-Aid? And this is a great thing to watch, to see, like, is this going through? Is this deal with China? Is China living up to their agreement? Is this that chance that Scott Bessent was saying, a reset? China, U.S. reset. I don't believe it, but this is the place to look in my mind, right? This is an easy place to look as the soybeans. All right, let's take a look at this. This is the live cattle. So this is live cattle. Let's look at the monthly chart on this. Okay, so here's the monthly on live cattle. And, we got to above a 1618 extension on this. Okay, and I'm just going to pull that off. But you can see that, this is what's gone on in this space for a long time, okay, since basically the 1980s, this market was pretty much flat. I wouldn't say I think ranchers could make it. Oh, they did okay most of that period of time. Not great, but it was pretty flat. And then it was flat again. Then one spike up into 2014. And then this, I think, is what really crushed them. Okay, this area right in here really hit the ranchers hard. This 2016 to, 2020. That 4 or 5 year range in there. Why? Because you had all these globalists coming in, making these moves with Smithfield, China, Bill Gates, blah, 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 all these actors coming in. And I think it really put pressure from a different dimension on the cattle ranchers. And not only that, they were trying to wipe out the herd. So they were calling about all these different, what was it? Mad cow disease and all this stuff. You know what I mean? That, is some of it for real? Maybe. But how do we believe that after what we've been through with COVID? You know what I mean? You have to be skeptical of all these things. Mad cow, screwworm, whatever that was on the chickens, all this stuff. I'm so skeptical on all this stuff now because you have to be. I don't know how you can't be skeptical on everything. And they're the ones that are creating this conspiracy. They shoot down the conspiracy theories, but the conspiracy theories tend to mostly be right. But then they're on to the next ones, creating the next one. So, it's this crazy cycle you get into where you're like, no. Anyway, I think you guys know what I mean. The point is, look at these cattle prices. They're through the roof. Okay. The problem is I'm not sure the ranchers are getting all that healthy. Why aren't we able to bring down the prices ourselves by saying, hey, let's just open up the floodgates. Let's give some incentives to our farmers, and let them, and that's what Brooke Rollins is talking about, is trying to increase our cattle herd. Again, what's that going to do? Bring down the prices. So Argentinian beef will help bring down some of these prices. And we're just trying to create balance points. What you want is stable, right? You want stable growth, but stable. It doesn't look to me very stable. Long periods of sideways that just grind on people, a spike up into 2014, a sell-off, grinding, outside influences with World Economic Forum, globalists, climate change gurus, all these nut jobs. And then you get this big run up in the cattle prices, okay? And what does it do? It just creates more inflation. The cost of food for people to get protein is up, right? Because if it's here, it's everywhere, okay, in this protein space. Because this is a major protein source. Chicken and beef and pork are major protein sources for the U.S. economy. Okay, that's that. Let's take a look at gold. Let's take a look at silver, see what's going on there. And let me take a look at this, see what we've got. Okay, here's silver. So this is that gold-silver ratio we talked about. And this is what gave us that concept of being long silver more than gold, right? It had some catch-up to do, meaning that when it got up to the upper end of that purple shaded zone, okay, this back in here was this, just for reference, this is 1990 back in here. This one was 2019, okay? When we got over 100 ounces of silver to buy an ounce of gold. Okay, that's what the top end of this thing means. And then we just got there again, okay, earlier this year, May of 2025. So the concept was at some point this thing, it's either going to break on 120 ounces of silver to buy an ounce of gold, but the odds were in our favor that silver was going to outpace gold for a period of time. And it did, okay? And you can see this yellow circle in there, right? That it did come in. So now we're at 82 ounces of silver, 83 ounces, somewhere between 80 and 85 ounces of silver to buy an ounce of gold. Okay, it's come in a little bit. I wouldn't say that it's a guarantee that it's going to come down into here. Okay, there's no guarantee, but there was never a guarantee that it was even going to come back into 83 or 85, but the odds were quite high that it was going to come into there. But there's no guarantee that it's going to come down into there. It can, okay, it could, but there's no guarantee of that. And that's what we're going to be watching for. So if we just look at this silver, hopefully I've got a good chart on this. It's easy to get to. Let's just look at this on a daily. Is that going to give us, let's look at this on this one. There we go. This is silver. So again, we get this massive run up. What do we have? 37.93. It's not even probably showing up on here anymore. 37.93. I think that's where we had our full upside objective on this thing. Let's just call it right around in there. Okay, that was our full upside objective. I'm just going to go white with that for now. This isn't the perfect level, but it was 37.93. That was our full upside objective. Once it got above that, we said, look, our job's pretty easy. Okay, we just have to sit back, let it go. Came back, retested it, came back, retested it, and then we get this big push up. Where'd we get a push up? 250. This thing moved very fast, okay? Moved through levels very quickly, and now we see this pullback, this sell-off, and now this consolidation period that's probably going to, I could see this thing going sideways in here, but if it starts to break below that lower purple shaded zone, below like 46, maybe there's more downside in these metals, but we can use silver to kind of also buoy the gold market, right? What's going on in gold? Let's go over and take a look at gold. But I think this is our range, right? Somewhere between this 46 and 48 bucks, 49 bucks. Kind of hovering below that 50, digesting this big move, letting markets adjust. We heard the whole thing out of London, shortages there, people lined up to buy gold and silver. And then a lot of the fear aggregators around this gold space out there in metal space talking about, oh my gosh, silver's going to 1,200, silver's going to 500. And then all these experts, coming out, they've never missed a cycle. And this guy says silver's going, tripling or whatever. It might do that over time, but that's when things are getting overheated, right? That's when they're creating fear. All right. Okay. So here we got the gold market. Let's take a look at this. Oh yeah. That's why, because I'm stuck on there. Okay. Let's take a look at this one. So here's gold. Let me, we've been watching this other one. So this is a daily on gold. I think in time, somehow gold's going to have to remedy this move up. Okay, this move up right here has been huge. Okay, and I think this thing could come back to 36.58, 36.60. It could take some time though. This thing, it could take all the way out into here. So again, silver going sideways, gold maybe going sideways for a period of time. Coming into these moving averages, it's been a long time since this daily's been at a moving average, all the way back into 2023. Okay, it hasn't touched this black moving average in quite some time. Now, I'm not a huge reversion to the mean guy, but it does ultimately work. Ultimately, things do revert to the mean. And this price is so far above that black line. I kind of fanned this thing out with those purple lines. thinking, where could it come back into this moving average? Even if this thing continues to build, again, slope, right? Slope of this thing is increasing, right? It's the rate of change is going up at an increasing rate. Okay, the slope is positive and it's going up at an increasing rate. The problem is the price is so far away from this that I think, we could see something in this area. Okay, but you're talking like middle of 2026. So this thing could go for a year, or 6 months to 9 months. It could go sideways. It could become a great trading market, right? Lots of ups and downs and lots of volatility as this thing figures out what it's going to do next. And then we could see that 5,000 run, right? We could see that 5,700 run, something like that. But I think this gold's sort of in a hold wait and see pattern. And but it's a great trading range. So let me go to this. I wanted to we've been looking at this one. I thought we were going to get this converging triangle and we didn't really get it. Okay, here's the gold. I put in a new, again, you're always trying to find the, oh man, I just blew it. I just erased something I didn't want to erase there. Was this it? I think it was this. I blew it. I wanted to look at that. I think this is it right here. This will work. Okay, so you just play around with these things, right? There's no, it's an art and a science. There's a little science, lots of art. But here's this downward sloping trend channel. This would fit with a consolidative pattern, okay? This fits, right? There's a couple key points on here, okay? We've got, this right in here. We've got, this point, whoops. We've got, touching up in here, okay? And then we get down into this area, this spike down to 3,900. Look, this gold market's going to love these big round numbers. When it gets on a run, watch these 3,900s, 4,100, 4,000, 4,200, 4,300, 4,400. It's going to psychologically, these knuckleheads are going to drive these things into these levels, okay? And that's what we see. Once it breaks 4, it's probably going to 39. If it looks like they love to test these big round figures, and that's what we see. This move down to here was exactly at 39. This is up here is almost exactly 4,000. Okay, so again, 500-point sell-off. What? That's 12%, something like that. And it's been pretty quick. This move right here was incredibly quick, right? That first flush, that's what hoses people, right? Okay, and there we go. So I think and that's where at the upper end of this trend channel. Now, why do I use this? Maybe this thing works again. Maybe it goes down into here, 38. It's possible. But more importantly, what does it do if it breaks above? And then does it ride that thing? Does it break above and then come back down and retest it? Then that gives us validity that this thing did actually mean something. Somebody else is watching this, okay? Some other hedge fund manager, somebody else, somebody big is watching this kind of a technical structure. And they're looking for places to be a buyer, low-risk places to be a buyer, okay? So again, we're trying to take the media out of this thing. Look at the technicals, look at the charts, and trying to sort this thing out. All right, and then I want to go and look at this real quick. Let's look at copper. We haven't looked at that in a little while. Okay, so here's the copper market. So again, this thing got run up here into this green box, and we said, look, this thing is probably getting a little overdone. And it's not, this is strong, okay? This shows strength in this copper market, all right? We get a big push up into that green box, and we talked about this. It's getting a little overheated. Probably going to see it pull back. It was a 1 minute move, 1 to 2 minutes, right? Something came out of the Trump administration and they whacked this copper market so fast. If you didn't have algorithmic orders in place, you were going to get hammered on this thing. This thing sold off straight down, and I'm not even sure I can really show this on this chart. There you go. You can see this 1 bar down. And this is a weekly chart, but that weekly bar, okay, that one where I've got this thing right now, it happened in 1 minute. So that weekly move basically happened in 1 to 2 minutes. It was a brutal move down. And then it had people trapped, and you could see it went sideways for a while. Now this thing's climbing back. When this thing pulled back to that moving average, okay, right here, right there, and it's kind of in the middle of this range, like this thing starts to break out this time, it could be for real. So again, this could become a good bullish market for a long period of time. And this copper, and it fits, right? What are we doing? We're bringing back the rare earth metals, rare earth minerals. We need copper for these data centers, for all this stuff. So copper-related stuff could become very good now, right? We had the big push up to tell us this market's got energy behind it. We get a big whack down, okay? And now this thing's recovering and it's quiet. So copper-related things should become very important to us. Another underlying trend that should look good to us. And we've got levels to measure it against. Okay. We got this black moving average. It's kind of going sideways. I would imagine the rate of change will pick up on this thing too. If I were to draw the fan lines on this, I would be aggressive. I would say this copper market, the moving average is going to turn up on this thing. Okay. And it's going to take the higher road and this thing's going to move. So again, we could go up to sideways for a period of time, just like in all these markets. Okay. Just like in the silver and copper, we could consolidate for a while. Okay. Over into here. And if we do that and it stays above and it moves above this trend channel, it rides it, comes into that moving average price and time, you could then start to see this thing make another big push up. Okay. And this would be like out and again, late 2026. So, July, August, September, October of 2026 is where we would see a lot of these things kind of coming together. Silver, gold, copper. Okay. Again, looking at this metals. And what we should do is look at palladium, platinum, look at steel, look at aluminum, look at some of these other markets to see if we don't see some kind of a trend there. That by that time, everyone will have forgotten about gold and silver. They'll have moved on, right? There'll be another fear tactic out there, another scam going on, right? Something else going on. Who knows what it is? And then that'll be, what's getting promoted. And that's the point for us to be prepared and move in on these metals, right? For potentially another move up. We'll see what happens. We don't know what's going to happen, but that's kind of what I'm looking at right now, kind of the outlook on this. Quick look at the dollar. Okay, we've been looking at this. And the dollar... Again, this is one of my favorite trades. We talked about this purple shaded zone. If the dollar could get above that, and it did, had a deep pullback right around in here, okay, it spiked down, but then it kind of moved up and it held. Now we've broken above these prior highs back in here, and we're making progress toward, okay, this 100 level. So and we've got energy, right? The blue box down in there. We've got energy in this dollar. Again, what's going on? I don't know. Okay. I can speculate, and that's what we'll do on Monday with the European Central Bank, digital currency, dollar, stable coin, Genius Act, Clarity Act, right? Tokenization. We can go down so many different paths with this dollar. President Trump defending the dollar. The dollar is probably going to fail. Is it going to fail on the downside or the upside? If it fails on the upside, I think it helps the U.S., the everyday U.S. person, because their dollar of labor goes further with a higher dollar. Okay, the dollar goes up means we can travel cheaper around the world. Great. We can buy things around the world cheaper. Right? Great. It hurts the rest of the world. Okay, but at some point, you're hearing a lot of this phenomenon out there of like people talking about Nick Fuentes. Is out saying this stuff, and a lot of people are in this mentality of. Just to sum it up, because we're running out of time here, but sort of like screw everybody else, we need to take care of the U.S., And who was it that was out saying this the other day? Someone was out saying, defending I can't remember who it was. Someone was out talking about this. A pretty high profile person, I think in the administration, was saying, someone was asking them about taking care of, I think it was J.D. Vance, right? J.D. Vance was doing a turning point thing. Again, not my favorite guy, J.D. Vance. He just too slick and backed by Teal and all this other stuff, technocracy. But anyway, he was out saying this where, look, some foreign lady asked him, she's like, look, I've come here, I've spent all my money on college, I've done the right things, and now you're going to tell me that I don't get a green card, I don't get it. And he said, look, there's 8 billion people in the world, right? I'm the vice president of the United States, and I'm just here to tell you the truth, which is we can't care about every single person that wants to come to the U.S. and go to education. You want to come here and go to school? That's great. But I have to care about U.S. citizens. And so, again, that's the kind of things we want to hear. It's painful. You want to take care of everyone, but you can't, And so I think the key to the U.S. is we have to lead the way. We've always said this. We all know this. You have to lead the way and show the world how to do it. Again, every country should be looking out for themselves. And so it was good to hear J.D. Vance say that. Again, this guy is slick as can be, okay? He's kind of taken on the role of Charlie Kirk in a lot of ways, going to do these things with the young, trying to drum up. And you have to do that as a politician, right? You need to drum up support before you need it in preparation for a 2028 run. I'm just very concerned with the guy. I don't trust him. But anyway, he's saying the right things, okay? And that's maybe what scares me even more, is this guy is as slick as can be. But that's the right, it's painful, but that is the right. I think that's the right attitude, as much as sometimes from a humanitarian standpoint, people don't want to hear that. We don't like it, but That is the truth. We have to look out for our country first, and we have to we have to do that. I mean, it's just we're $38 trillion in debt. We have unfunded liabilities like crazy. We have to look out for our own country, or else the world falls. So with that, hopefully we did a good coverage this week on some of this stuff. Again, government shutdown's probably going to heat up this weekend. We've got, the food stamp thing coming to an end. I think they're going to be under pressure to do something, and I'm sure they've got some things already ready to deal with this. I think the administration's already kind of has a game plan on this, and they're going to put a little more pressure through the weekend, probably make the rounds through, all the weekend shows, the CBS, the ABC, the Morning This, the Maria Bartiromo. They'll be out talking about this all weekend and trying to get as much, and then come next week, we'll start to see some rubber hit the road. And then I'm sure the question is, do we get any real progress on this, or is this just more Band-Aid stuff? Is it just another thing and we're going to come and just keep revisiting, or are we going to actually do something of importance here and make some real changes? And the changes might be painful. And again, might take a pound of flesh, but we're going to have to at some point watch these interest rates. Otherwise, all this stuff that we're doing won't matter. If these interest rates spiral out of control, we're going to go into a sovereign debt crisis. And if it starts in the U.S., this world is in big trouble. If it starts in Japan and Europe, we can probably fend it off for a little while. But again, those are the kind of things I'm watching. The 10-year note actually looks fairly good. I think I just picked some up while we're in here. It came back in, retested a breakout zone. Let's look at that real quickly. Let me just pull this up, because I think this is important, and this will kind of get us into next week. All right, here we go. 10-year note. Okay, here's what I've been looking at is, the thing made great progress, got up above the halfway, got up to the 5/8, 6/8 back in here on October 17th. Okay, made a nice move up to the 6/8, came back in down to the 3/8 down in here, back up to the 5/8, back up to the 5/8, to the 5/8, back down. You can see all these yellow circles bouncing off these levels. You could probably throw that one in there. Couldn't get back to the halfway, broke down. Kind of spent a little time at the 1/8, retested the 1/8, down into the breakout zone again, right? And so I was talking to someone yesterday about, sometimes you just got to take a tree and chop it off, and if it's got guts, it'll grow, and I think maybe that's a way of thinking about this, right? This thing started to grow and it just wasn't looking good. It just couldn't. It had all the things it needed to go, and it just couldn't go. So sometimes you just got to chop it off, and then, wait till spring and see if, the thing bushes out again like you want. So if it's got any guts, it'll grow. That's the thing here. It's been whacked down to the ground, back down to the breakout zone. Does this thing have the ability now to take off? And when this happens, it could just squirt right through that halfway and off to the races up to that 114.20. We'll pick up on that next week with the currency. We'll pick up on that on Tuesday with debt day. Watching this 10-year note is very important, I think, at this point. Again, we've got to get these. We got to have stability or rates coming down. Otherwise, we're going to be spending so much on our debt, because that clock keeps ticking higher. In a couple months, we'll be at 39 trillion. And then, early next year, we're going to be pushing 40 trillion. Big psychological levels. What's the impact on this over the world? All right. With that, have a blessed weekend, everyone. We'll see you on Monday. And let me see. We'll just do Rocky on the way out again. We got to do this again.
Hey, go get Rocky!